Well, it's actually a tale of two quarters, I would say. This most recent one that we just talked about yesterday, of course, was the one ending March. But as we all lived through, the tail end of calendar 2018 was quite a drop. And what we saw this past quarter was a rise back up. Now, in our business, that means a couple things. Hugely successful first quarter, right, being the last quarter of 2018, huge trade volumes, high VIX. Even as the market was going down, our most active traders were in the market buying on opportunity. And then what we saw in January, as the market started to climb back up, our retail clients were a little bit more resistant to getting back in the market, believe it or not. They were a little bit more careful. VIX dropped, as you know, dramatically, so our trade levels dropped as a result. So this deep V was really quite a story. In our case, it had an impact on some of our revenue growth.
What I'm really trying to figure out from your answer is just how much retail investor participation there is right now in this market as we reach record highs.
Yeah, well, our most active traders are trading a little less than they would normally. Our more casual investors and traders are actually sitting on the sidelines, opportunistic about going in, but they're actually...
Opportunistic or worried?
A little of both, depends on who. There is less activity, certainly. As you see, the VIX itself is low, but the actual trade levels are still down. We just announced trade levels to date are about 800,000. That might be getting a little bit back into a normalized range, but frankly, there's been a little less trading this year because we saw the activity we did at the tail end of last year.
I mean, December was brutal. We were sitting on this desk on, a day like Christmas Eve. You won't forget it. I mean, that was a hideous, fast, precipitous decline. What sort of damage does that do psychologically for retail investors?
Yeah, small dips. If you remember, this is the longest bull market we've ever seen, so small dips are normal. When you saw such a significant drop in a relatively short period of time, that was impactful on people who haven't lived through it before. So a younger generation of investors and traders would say, ooh, need to think about that. The more active traders, those that actually say, I like that gives me an opportunity to buy, they stay in. But the average retail investor is thinking back and saying, oh, okay, some of them are moving more to cash, higher yields instruments, safer instruments, less volatile instruments as they assess their portfolio in light of that market. On the other hand, the irony is we're right back up to record levels.
Right. So does that draw people in?
I think it does. Honestly, when they see the headlines of, hey, here we're back at record levels, there's an element of some investors that when they see something like December, they say, oh, I don't even want to look at my statements for a couple of months. And then they see the headlines, they watch CNBC News, and they go, oh, wait, what just happened in the last couple of months? We're at record levels again. So it's the old adage of stay in the markets, and over time, you'll be well rewarded.
I just wonder if you're having trouble in general getting retail participation, especially from the younger cohort. You mentioned millennials and their skittishness around moves like we saw.
Yeah, and actually we find, first of all, somewhere about a third to maybe even 40% of our new account openings are from millennials. They are actively interested. They're clearly interested in the stocks that they know. They like to trade the most active FANG stocks, the products that they know about. They're interested in crypto. They're interested in cannabis stocks. Absolutely. It still makes up about, the combination of those two categories make about 6% of our trades, even in the last quarter. And that's significantly down from where it was when it was at the height of its craze. So, yeah, there is still some significant interest right now, even in light of what happened last year.